And Jeremy, what do you think people could start to, realize here as some of the anxiety settles down?
Yeah, I think first thing is COVID, right? Numbers are collapsing from a perspective of cases, hospitalizations, deaths. That is a big alleviation of stress from the overall things that we can get back to doing on a normal basis. And so, being that the consumer economy is 70% of our economy, if we can get back to doing things normally, that is phenomenal for our economy. So if we get to that, and not only that, the supply chain components of that, as COVID restrictions start to alleviate, we think that actually adds to the element of being able to satisfy that demand a little bit more, to where you could see inflation start to wane down towards the second half of the year. So you combine that with earnings growth that's, we're above expectations. I think over 75% of companies exceeded their earnings expectations, along with 8 to 10% earnings growth this year. I think those are the things. Obviously, Russian conflict is a problem, and it's something we have to take into consideration. But outside of that, there is still some good news in the markets that could drive these things higher.
So where would you put money now in anticipation of what you see?
Yeah, so we did a couple of things, honestly, even earlier this week, is that the first thing we started to do is we took an examination of who can still grow their earnings in that double-digit range that have had significant corrections that we still think are cyclically positive. And the first one that we went to was BlackRock. BlackRock is a phenomenal company overall from the asset management perspective. They're going to continue to grow very well. They have space in the ETF, they actively manage, they're across the landscape, and they've been there in a lot of different scenarios and usually have added value when the stock has had a correction. The other area we're adding aggressively to is we still heavily believe in the home improvement cycle. And the home building cycle, too, to be honest with you. So we bought Lennox and we bought Lowe's this week as well as beneficiaries of that have come down here recently to much more normalized valuations, where we think their EPS growth profiles are in the 10 to 15% range over the next few years. So all of these are still growing very well. And the recent correction that we've had in the overall markets allowed us to get in at a valuation that makes a lot of sense to us going forward.
All right, Jeremy, thank you very much. Thanks for the picks that you gave us. Jeremy Bryan, we appreciate it.